FY2018, we have already posted the results, and I hope all of you had some time to go through it. We concluded our board meeting on Friday, so it gives me pleasure to share with you all that the board has declared an interim dividend of 55 paisa per equity share of face value of 1, that is 55%. So before getting into the specifics of the presentation, which all of you hopefully are looking at right now, I'll just give a brief on the auto industry, which is where we belong. So coming to the last quarter, or maybe even at the larger level, the first half of this fiscal year, as you all know, things have been quite good. I think we have had a pretty good year in terms of the sales in each segment, be it two-wheelers, three-wheelers, of course, passenger cars, SUVs, commercial vehicles. On all fronts, it has been generally good. Yes, there is a bit of, if you compare year on year, last year there was the GST implementation, so some figures cannot be compared in the first quarter and the July part. But however, on the whole, there's been a definite growth in the market, and things on that front have been good. Commercial vehicle and two-wheelers, they showed the strongest growth. We all have seen that in the month of September, and of course you must have also read for the October, the passenger car sales have been flat. In fact, in September, we also had a little bit of a dip. So that is a bit of a concern for the market for the time being. We'll come to the reasons why. But otherwise, on the commercial vehicle, we continue to remain bullish. On two-wheelers as well, bit of caution in terms of the optimism part. We are still optimistic, however. Now, we have been seeing this little depressed sales. The reasons for that, many of you again are aware. Overall, the sentiment, I think, after long has dampened. To start with, of course, the crude oil has been a big hit for the country. So consequently, the forex also has impacted significantly. And then there is, this also fuels the inflation in India. Further, of course, dampeners have been the insurance costs, especially in the two-wheelers segment. The interest rates also are, forming up. There's a liquidity crunch in the market due to, things that have unfolded in the market, which you all are aware. So all this has put definitely, a little bit of a dampener in terms of the current situation. But however, we feel the long-term story is still intact. In terms of commercial vehicle, we are pretty certain. We have spoken to all commercial vehicle manufacturers, and also based on our analysis, we are quite bullish about this segment holding on until April 20 for sure. Because that is the time when the BS6 norms, the emission norms, the new emission norms come into place, which plays a heavy price on the commercial vehicle particularly. So till that time, we see a lot of pre-buying happening. Even after BS6 implementation, my belief is if economic indicators are good, there might be a little bit of a slump for a few months. But it ought to catch up again when things start, when the demand starts picking up. Also, if you see on the larger story in terms of infrastructure in India, everything has been, so far it's been good. There are several projects announced by the government, Bharat Mala, Sagar Mala. You have the freight corridor. We have the metros, happening. And the good part about this is in at least the freight corridor, and even if you see the Bharat Mala project, there are a lot of tenders that have been put out already. So it's not just promises that the government has made in terms of, whatever, 7 or 8 trillion rupees being spent, but we have seen clear movement in terms of tenders being put on offer. And in the freight corridor, in fact, the work has also begun. So there are a lot of reasons to believe that, this, while it may be a little bit of a slowdown now because of crude oil, mainly I would say crude oil related, and a bit of course, political uncertainty owing to the elections around the corner. The larger story of India still remains intact. So that's why I said, if at all, it may be a temporary blip. So this is just a brief background of the auto industry. Now, I would, seek your attention to the presentation that we have shared on the Gabriel results. So if you open that and you move to slide number 3, which is titled Financial Highlights, this quarter versus last quarter, quarter 2 versus quarter 2 of FY18. Glad to state that we have had a very good growth in revenue, 15% growth. So we posted 541 crores of sale in this quarter. EBITDA has grown 13%. And in fact, PBT is exactly in line with the revenue growth of 15%. PAT has grown at a little lesser rate of 9%, mainly owing to the fact that the 35-2AB benefit on the R&D equipment, R&D expense has been reduced from 200% to 150%. To that extent, we have had that PAT a little lower than the PBT. If you move to the next slide, slide 4, this is for the first half. So we have had the best half so far ever, 1,056 crore rupee of sale. So this is the first time I think we have crossed 1,000 crore of sale in a half. So this is 18.8% growth for the comparable half last year. And EBITDA also has grown at 9.5%, and that has also grown exactly in tandem with the revenue, which is 18.8%. And PBT, as I said, is slightly better at 21.8%. So this is broadly the story for the first half in terms of financials. We move to slide 5, which is the revenue mix. As I mentioned earlier, the growth in two-wheeler and commercial vehicle has been very strong compared to PC in the marketplace as such. In the Indian domestic marketplace. So that's why we see that shift of percentages that have happened. So in the first half, 60% of our revenues have come from two-wheeler business unit, 26% has come from passenger car, 14% has come from commercial vehicle. Having said that, yes, of course, in passenger car, we also, in addition to the segment mix, we also had a model mix playing, meaning several of the top models, which are currently the top 10 selling cars, where we have our product offering, which is on the Alto and Wagoner, that has gone down slightly, whereas Baleno and Swift Desire and the Swift and the Creta, they have improved. So there's been a shift to that extent, in addition to the market shift, as I mentioned. Coming to the channel mix, which is the other graph on this slide, OE segment is 86%, while our aftermarket is 11%. The growth of aftermarket has been quite strong. We are still growing aftermarket at, despite being the leader, we are still growing at 19% in the aftermarket. And in the OE, as you all know, these are times when, OE demand is extremely high. So obviously, there's a large push in the OE. So to that extent, there's a slight increase in the OE offtake. So that is on slide 5. Slide 6 is mainly on the P&L profit and all, which I just summarized in the first few slides. So the details are here. We are open to any questions, any suggestions, observations that you would have later when we open the call. And similarly, if you go to slide 7, which is the balance sheet. So as I said, instead of going into detail on this, we definitely can take the questions during the call on these two slides. The slide 8 is, which clearly shows the performance trend quarter on quarter. I think, your company has been able to maintain the consistent performance, quarter on quarter for several quarters now. It's not just one odd quarter, but you can see that has been a steady performance, and the EBITDA and PAT, if you see the absolute numbers have continuously been growing. You can see the light blue bar in the graph of EBITDA and PAT. You can see the continuous expansion of that graph quarter on quarter on quarter. So that is what is briefly the summary of this particular slide. So that's basically the end of the presentation. But to mention, the awards and accolades that we have got in this quarter. Some of them are very special, which I thought I'll put up in the presentation, because these are again very important for not only benchmarking us with our peers in the industry, but also these do reflect a lot on the brand Gabriel. So we also have to keep reinforcing this brand at all levels, in all the relevant forums. So that's why these awards are certainly important. In addition to, of course, motivating the great team that Gabriel has. So we for the first time we got the Brand Leadership Award from Pune Best Brands in 2018. This was in the last month. We also got a Certificate of Excellence in Spare Parts for Quality Cost Delivery from Honda Motors India. And there was a significant audit that happened by Volkswagen, for whom we are the single source supplier in India. So Volkswagen, Skoda, all their cars manufactured in India run on Gabriel shock absorbers. So we were upgraded to the A grade, which is the highest grade in their scheme of things, which definitely does hopefully open up some doors for in their global world. So that's why this is certainly significant. And another significant award that we got is the ACMA National Winner in ACMA Quality Circle. So as you all know, quality is the biggest focus area for Gabriel and, of course, the Anand Group. So we lay a lot of importance. We involve employees in each of these activities and motivate them to do these activities by themselves. So Quality Circle is a great way to do this. So glad to state that when we had the ACMA CM National Conference, which is once in a year, where the entire auto industry is present for 2 days in September typically in Delhi, where Mr. Nitin Gadkari and Mr. Anand Gite, the Honorable Ministers, and the entire fraternity is present. There was only one award announced this time, and only one award given, and that award went to Gabriel Chakan for their excellent work in one particular quality circle. Of course, we have also one quality circle, so we send this team to encourage them to, these are young diploma engineers, so we send them to even Singapore for participating in an international convention, where again they won a gold award. So this is these are some significant awards and achievements that have happened for Gabriel in this quarter. So that's very briefly on on the quarter that we have seen on the first half. So now I'll open it up to questions and your suggestions, observations, which we definitely look forward to. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment as the question queue assembles. The first question is from the line of Jai Shri Ram from Karvi Shop. Please go ahead.
Thank you very much for taking my question, and congratulations on a good set of numbers. So my first question is on the increase in revenue contribution from two-wheelers. Did you see any improvement in share of this in particular OEMs? Can you give me some details on that?
Yeah, Jayashree, so thank you for your comments. And yes, in two-wheelers, we definitely saw an increase in market share. Let's say that, if you talk about the industry, it grew by about 11%.
Yes.
Compared to that, our sales has grown by over 20%.
So actually, I have recorded that it is 25%. You have 25% market share in two-wheelers. So,
yes.
Is that the figure continues to be the same, or was there any increase?
As I said, obviously that will be marginally increased. We don't have the market share figures calculated as of now.
Okay.
But what we do definitely is our growth in each segment versus the industry growth. So the industry has grown at 11% for two-wheelers. Even if you split that within motorcycle has grown at 14% and scooters at about 6%. On both these, we have grown in excess of the market. We have grown at over 20%. And of course, in three-wheelers, we have a dominant share, and there the growth has been far higher. The growth has been almost 35%.
Okay. And in the commercial vehicle segment also there's a slight shift of say 100 BPS with a market share of 85% you'd mentioned. And how did that go for the quarter?
In commercial vehicles, we have been able to beat the market growth. As per our estimate, the market has grown at about 38%, and we have grown at over 40, almost 45%.
And regarding, there was some commodity price hike and all, and were there any price hikes during the quarter, and how was the product mix like, and any improvement in the realization?
On the commodity side, yes, we are definitely facing, though it has not happened in the last 2 months, I must say, but the last whole year or even more, there has been a continuous and, in fact, unforeseen increases in all commodities, be it steel, be it aluminium or rubber, crude oil, of course, we all know for a fact. But the other commodities, like steel and aluminum are not tracked so much, but even that has gone up significantly. So, but surely we have not seen an increase in the last couple of months. So right now, as you know, we have been discussing with OEs on the compensation part. So that those discussions, some have happened, some have closed, but that's an ongoing process. Some are quarterly, some are 6 monthly.
Okay. So the EBITDA margin looks quite stable at 9.5. Do you think you'll be able to maintain that for the rest of the year?
Yes. You would remember we had in fact told that we are looking at hitting double digit. That was the plan, definitely. But this year we got hit by some unforeseen things like, of course, the forex and the duty increase that happened. And also the raw material cycle, as I said.
How much are you importing on the raw material front?
On the raw material front?
How much would be your imports?
Roughly 15%.
15% imports, okay.
Yeah. So obviously that has put some additional, otherwise, of course, I definitely cannot use it as in justification, but yes, we'll have to now find out ways to overcome this and still work towards the target of double digit.
Okay, and there was a slight decline in your employee expense. Any attrition going on, or maybe there was a one-off in the previous quarter?
You said decline, right?
Yeah, decline.
No, there's no attrition. There's no attrition at management level, etc. That attrition is at the normal rate. But yes, we definitely have taken several steps to see that how can we improve our productivity, both on the white collar as well as the blue collar. So we have done some of those efforts are happening, and also yes, there's a higher volume effect certainly playing.
Okay.
Ma'am, I'm sorry to interrupt. If you can come back in the queue.
Yeah, sure.
Yeah, thank you. Sure. We have the next question from Mr. Ronak Sarada. Please go ahead.
Hi, Manoj. Quickly on, if you can just highlight how's the competitive intensity across segments, two-wheeler, PV, and CVs?
Ronak, couldn't hear your question.
If you can just, we have discussed this before. Can you reiterate how's the competitive intensity across all your segments, so in two-wheelers, CVs, and PVs?
Competitive intensity, I would still maintain the same. Passenger car is definitely most competitive. Two-wheelers is becoming, yes, it is definitely becoming more competitive than it was earlier. So I would say these two definitely are quite competitive.
Okay. In PVs, who would be the biggest competitor for us?
In CVs?
PV, passenger vehicles.
Passenger vehicle?
Yeah.
That's Tenneco. Tenneco is actually the leader in CV.
Okay. And what would be their market share versus ours?
Pardon?
What would be their market share versus Gabriel's market share?
Well, we do not have, but definitely, our market share would be in the range of 20 to 23%, and they would be definitely in excess of 35%.
Okay. My next question was on passenger vehicles. If you look at last 4 years, the segment share actually come down, or it has remained flattish. while two-wheelers and CVs have grown. So any specific reason? I mean, maybe we are not participating in the high growth models, or some customers have not fared as expected. If you can just highlight on passenger vehicles, please.
Yes. So passenger vehicles is actually interesting in the sense, of course, there is one part of it which is Hyundai. So Hyundai is catered to by mainly, in fact, Mando India.
Yeah.
So the balance is what is available to us, so to speak. And so what we do is, the way OEs handle it is, they award platforms. So the platform is given on a 100% basis to one particular player. So it can so happen that sometimes the model that you are supplying is in great demand in the market, so naturally your numbers are better. And so this time it is actually the other way. The models that we are supplying have actually gone down. The Alto and Wagoner, which are in the top 10, their share has gone down a bit. And we are not there on the Swift and Baleno platform, which are doing extremely well. So there's a bit of that. But having said that, yes, we also have, let's say Volkswagen, that has come down. Volkswagen has dropped market share significantly. Similarly, if you see even Ignis, we are on the Ignis, which is a new model, but then that is not doing well. But if you see the SUV part, it is other story. So we are there on Brezza and S-Cross, which is doing extremely well. So if our growth in SUV is actually better than the market.
Sure.
So that is one. And second, also I would like to highlight here that passenger car, we have also been hit by one more fact, which is a little bit out of our control, in the sense the Iran sanctions. We were supplying a good number consistently every month, quite a big number to Renault Iran through Renault India. So as you know, that has become zero from the month of May onwards.
Okay. Thanks for the detailed answer. So, we have seen, we are hearing some order wins with Hyundai and Kia for the other domestic auto ranks.
Yes.
Any luck for us? Is Kia?
No, of course we continue. We continue trying, but just to share with you here, on the passenger car, we have won some good new orders. We have won the Peugeot Citroën project, which is, as you know, which was announced earlier this year. So we have won that particular program, and in addition, we have also won some refreshes for Mahindra platform, plus of course the new Alto for Maruti. So all that order we have backed, but that will not happen immediately. The SOPs are 1 year and 2 years down the line.
Sure. And on the railway side, we're pretty excited. On the railway suspension business. How's that panned out over the last 12 months, and what's the expectation there?
So railways, yes, we are seeing growth, especially in that LHB segment. More and more coaches are converting to LHB. So we are seeing almost a 15 to 20% growth in railways. The size, as I always say, size remains small, but they definitely are quite relevant to us.
Okay. Thank you, Manoj, and all the best.
Thank you, Manoj.
Thank you. Participants, if you wish to ask any questions, you may press star and 1 on your touchtone telephones. A request to all participants to limit your questions to 2 per question. Next question is from the line of Arun Agarwal from Kotak Securities. Please go ahead.
Hi, sir. So my question is on the passenger vehicle segment. There we believe we would have degrown this quarter as compared to second quarter last year. That would be right?
We would be, yes, marginally, very marginally degrown, mainly, as I said, on account of this Renault order going,
Yeah. But that would be like 4 to 5.
Not in terms of market share, because that market is in Iran, but in numbers, yes.
But still, it would be a 4 to 5% sort of decline in revenues on a year-on-year basis for this quarter?
For the passenger car part, right?
Yeah, passenger vehicle, including SUVs and passenger cars both.
Yeah, that's right.
Okay. And so on the aftermarket segment, where we talked about, you told that the segment has grown by 19%. Was it for first half or was it for second quarter?
It was more in terms of the second quarter.
Okay.
We saw a bit of sluggishness happening the first few months, but second quarter, in fact, if you remember in the August telecon that we had started seeing some good movement. So I would say second quarter has actually started moving up well.
So this 19% growth is for this entire second quarter you're talking about, right? Hello?
Yeah, that's right, Aaron.
Okay. And so my next question is on the you talked about, you have given about the outlook that you share on the two-wheeler and the passenger vehicle and the CV side. While we remain pretty optimistic on the CV side, on the two-wheeler side, did we see any talks from any of these OEMs regarding cutting production or something, or even similarly even in the passenger vehicle side, or the production schedule remains the same as they were a few months back?
Well, see, we are seeing I wouldn't say it's a correction. It's a normal cyclical phenomena that happens post-Diwali. So we are seeing people, giving some additional holidays along with Diwali. Plus, of course, shutdowns are planned in the month of December, which happens every year. There is nothing that is out of the ordinary, both in terms of two-wheelers and passenger cars. Yes, in two-wheelers, there has been a strike at some of our OEMs in the south.
Mm-hmm. Right.
So to some extent, they have lost some production, but I'm sure they're trying to see how to make it up. But I wouldn't say that there is a big slowdown. Yes, there is. We'll have to see. As I said, we'll have to see. It all depends on what the Diwali sales happen. In this from today onwards. In fact.
All right.
I mean, fingers crossed right now.
Okay. And my last question is, sir, on the other expenses that seem to have increased significantly this quarter on a year-on-year basis. I believe one of the part reason for that would be the increase in management fee from 1.5% to 2%. But even if we were to remove that, 50 bips impact of that, it still seems that, the overall increase in other expenses is still similar to that of revenue growth. So we're not seeing any sort of operating leverage that possibly could come out, when you're growing at strong double digits. So any particular, one-off there in other expenses, or these are all just, normal?
Arun, I think there is nothing which is a specific material increase. Yes, you rightly identified the management fee part. There are certain variable expenses within the other expenses as well. The manufacturing expenses of power, fuel, consumption, freight, consumables, all of them are part of the other expenses. So they move in tandem with the sales. There is also contractual expenses which also move in tandem. I think those are the ones which are probably there, which is the part of that other expenses.
Okay, that's it from my side, sir. Thank you so much.
Thank you very much. Next question is from the line of Hiral Kenia from Intech Securities. Please go ahead.
Hello. Yeah. So thanks for taking my question. I have two questions. First of all, hello, am I audible?
Sir, can you be a bit louder, please?
Hello, is it audible?
Yes.
Yeah, I have two questions.
Just give me a moment, sir. Please, sorry to interrupt. Mr. Manoj, can you hear the question?
He was just...
okay, sorry, I thought I lost your line. Sorry to interrupt. Yeah, please go ahead.
Yeah, thank you. My first question is, we have announced a capex plan of rupees 1,560 million. So, what is the amount has been spent till first half? And the second question is, what is the contribution of the top 5 customers?
On the capital expenditure front, our capex for the first half has been is roughly about 25 crores, which has been spent up to H1.
Okay.
The balance portion of the capital expenditure typically is in the H2, in the second half, and so that would happen in the second half. So that I think that was one portion of your question.
Right, sir.
What do you want to?
And you said contribution of the top 5 customers by revenue, right?
Yeah, by revenue.
Yeah, so that would be, I don't have the figures offhand, but top 5, I see it should be about 40 to 45%.
Can we have a split?
Pardon?
Can we have a split?
We say that later if you don't mind.
Sure.
Yeah, thank you.
Yeah.
Thank you. We have the next question from Mumuksh Mandlesha from MK Global. Please go ahead.
Yeah. Thank you, sir, for giving the opportunity, sir. So what's the outlook for exports and aftermarket, sir? Hello?
You put exports in aftermarket or exports and aftermarket?
Exports and aftermarket, sir.
And okay. So there are 2 parts. One is the aftermarket exports and one is the OE exports. So on OE exports, yes, the key countries that we exported is Colombia. There, as you know, the things have started looking up. The market is going now. It was actually slowing down for several quarters, but now we hear from our partners that is going up. So that should definitely improve in terms of the Latin American sales. And coming to aftermarket, we actually have been able to get some good orders, and our growth in aftermarket exports is in excess of, though on a very small base, but that is in excess of 30%.
Thank you so much, sir.
Thank you very much. A reminder to all participants, if you wish to ask any questions, you may press star and 1 on your touchtone telephones. Participants who wish to ask any questions, you may press star and 1 on your touchtone telephones. We have the next question from Mr. Yash from Axis Securities. Please go ahead.
Hello.
Yeah, hello.
Good afternoon, sir, and congrats for good set of numbers. This is Pankaj from Axis Securities. Well, sir, first question, can you please help me with the capacity utilization for this quarter?
Yeah. So, as I said, the two-wheeler is absolutely running at peak demand. I would say the present utilization is almost 90% plus. Similarly, for commercial vehicle, that is also seeing peak demand. In fact, we are trying to add whatever marginal capacities wherever we can in both these segments. So they're being fully utilized currently. On PC side, yes, there's certainly, utilization, there's some scope to increase it further. We are currently running at about 65 to 70% utilization.
Okay. So, what revenue can we clock if we go to nearly peak demand for both all these 3 segments?
Yes, can we understand your question better?
Sir, in the 2 segments, we are almost reaching our peak demand, peak capacity utilization. The remaining is PVs. So if we consider peak capacity utilization for all 3 segments, what can be the tentative revenue potential?
Yes, so while, having said that we are, having a good amount of capacity utilization on these segments, that doesn't mean that it's at a peak revenue of these particular segments, because there are operations and certain of the products can be assembly line and they can be debottlenecked quickly to add to sales, and so not necessarily the capacity utilization number provides the peak sales revenue for the other 2 segments. And yes, I think on the passenger car segment, I think we have commented on the currently a lower utilization at this point of time. So, that's, I think, I hope those give you some background about the revenue numbers.
Right. So just wanted to understand if there is increasing demand from, say, two-wheeler and CV side, where we are almost reaching our peak capacity. And as you said, it will not take much time to ramp up the additional capacity, to add additional capacity if demand comes. So is my understanding right? So given that the CV market is looking quite attractive, and even the demand from two-wheeler side is increasing.
Yes, so we as we speak, we also have already taken these debottlenecking investments. Those are part of our regular capex, which we earlier mentioned. So both on two-wheeler side, we are currently in the process of installing one more line plus one more machining, some machining centers. Plus in commercial vehicle lines, similarly we are adding some equipment. So that will continuously keep happening. It's not a major equipment in terms of brownfield or greenfield, but it's just debottlenecking. And in addition, in terms of future orders, which is basically next year, as you all know, we have got the Honda motorcycle front fork for the Gujarat plant. So that building, it's a brownfield, so that building expansion is very much on track. The shell is almost ready. We'll start, and our equipment are also, getting ready at the manufacturer, so we'll start moving them shortly in the first quarter of the calendar year.
So we had launched few components other than the shock absorber components in aftermarket. So what is the status of that?
Yes, so in fact, the last one that we launched is, in terms of what we call the cone set, or, basically used for in two-wheeler segment. So that has got very good response. So that is going well. The tires, we had launched tires and tubes. The tubes are doing very well. Tires, it's a mixed bag currently, but it still is doing well in terms of the size of the business. Then we have the wheel rims, which is doing extremely well. So these are some of the new products. I'm just mentioning. There are others as well, but these are the new ones that we launched. So they are doing well. Yes, certainly.
So given the response, do we have any plans to ramp up the capacity or increase capacity, taking those components as full-fledged under Gabriel brand name?
No.
Full-fledged capacity.
Yeah, I understood. So you're talking if we can manufacture those and sell them, right?
Yes.
So we are definitely not planning manufacturing for this segment. We do not want to defocus from suspension, pure shock absorbers. And what we have done is we have carefully selected these sources who supply to us. So it's not that we approach any supplier. We have a very rigorous process of evaluating right from their capability, capacity, and including the intent. And only then we source our orders from them. So we are not planning any manufacturing in these products.
So our last question, do we plan to what was that? Sorry.
Yeah?
Yeah, please proceed.
No, you were asking a question, so
I missed it. Sorry, I missed it.
No problem. Thank you.
Thank you, sir. The next question is the line from Siddharth Mehta, individual investor. Please go ahead.
Yeah, hello. I wanted to first of all congratulate you for the awards. I know it's not easy to achieve the standard of quality and excellence on a day-to-day basis. We get caught up in so many other things. So, and since the company, after all, belongs to the shareholder, we are also very proud of the team and what you guys have done. So, congratulations there.
Thank you.
I wanted to ask you about the margins that we've got as a company. Obviously, the company is doing very well in terms of brand name, in terms of recognition with major customers, in terms of sales. A lot of the other parameters seem to be doing good. I'm a little concerned what we could do to increase the margins for the company at EBITDA of about 9-10%. and comparing this with automotive companies in general, not just shock absorbers, but in general, and I know it's not a apples to apples comparison, but it would be wonderful if we as a quality company making specialized products would get EBITDA in the range of about 20%. Have you ever thought of this as a strategic initiative?
Yeah, actually, very relevant questions. In fact, to be honest, we did have a theme in the last year's strategy meet discussions internally as to, I mean, of course, not in the range of, did I hear 20% EBITDA?
Well, if you look at automotive companies in general, not shock absorbers, and I know margins would vary product to product.
Yeah,
that's approximately the margins that one would expect, especially given an unusual product, a specialized product, a brand name, the quality, the presence, all of that. Yeah.
Yes, the question is very relevant. While, of course, we have to be also real to the fact that, in our commodity, even if I scan globally, it's not only India, but even in terms of globally, obviously we are not seeing those kind of EBITDA percentages in our product. But having said that, certainly there is a room for improvement. We can move up from this, high single digit to definitely at least low double digits. So that has been our plan. So, some of the actions that we have taken, just to mention, are one is increasing exports, which has not happened, to be honest. I mean, that's what I've told. That is one. The second part is growing aftermarket, which is happening. Adding new products to aftermarket, which is also happening. And yes, in terms of improving our costs, those exercises are happening. But yes, it's kind of a constant treadmill. So
there are some specialized products that are available abroad in the shock absorber space.
Yeah.
For example, adjustable, automatic adjustable, and so on, so on. And as India is buying more and more expensive cars and bigger cars, maybe there is some room for higher-end products that can help in India itself, apart from the exports.
Yes. Again, we have, developed our own adjustable shocks, which is, again, a very preliminary version. So we're working on that. Not yet there, but yeah, that's a good way of, having higher value products to improve your realization.
Yes, because the quality of team you have, it's I think you guys deserve to make more margins, or I should say we deserve to make more margins.
Yeah, point taken, absolutely.
Okay. All right.
Thank you. Thank you for the time.
Thank you very much. A reminder to all participants, if you wish to ask any questions, you may press star and 1 on your touchtone telephones. Participants who wish to ask any questions, you may press star and 1 on your touchtone telephones. We have a question from Arun Agarwal from Kotak Securities. Please go ahead.
Yeah, sir. Thanks for the opportunity again. So in the two-wheeler segment, can you give us a split in terms of your revenues? How much would be the scooter segment and how much could be the motorcycles?
In terms of revenue breakup, you are asking?
Yeah, in terms of revenue breakup within the two-wheelers, how much would be scooters for us and how much would be motorcycles?
I don't think I have that number up front, but I think we will try and get that across to you later.
All right. Okay, thanks.
Growth is what I think.
Yeah, growth we mentioned, and of course the numbers are definitely much higher in the motorcycle segment. But yeah, we'll give a split up.
So is it right to say that, the motorcycles accounts for almost 65% of the industry volumes, but for us that number would be higher?
I think so, yes. Possibly. I think it's difficult to guess. I don't want to hazard a guess yet.
Okay.
Deliver back to you.
Oh, all right. Okay, so thank you.
Thank you. Next question is from Pankaj Mobadi from Axis Securities. Please go ahead.
Thanks for taking my question again. Sir, are we in any new platform launched in this quarter or any other one which is already in market and would be announced shortly? Launched and would be announced shortly?
In terms of passenger car vehicles, we do not have in this quarter, but it's definitely going to happen in the coming year because the initial proto sample development is on. That's for the Maruti replacement of Alto. In terms of two-wheelers, yes, we have several products that are there in the pipeline continuously because there the product launches are far quicker. So the TVS Radeon, if you saw that launch, there of course it's our product. So
that was in Q2.
Yes, it was in Q2.
Okay, and Alto when the refurbished Alto is expected?
I thought refurbished is actually a completely new Alto, so that is, but in the next year it will be in the. I think it should be in the Diwali of next year.
So it would be FY20.
Yeah.
And how about CVs?
CVs, practically every new launch. Actually, CVs, there are so many new launches. It's mainly variants based on the vehicle tonnages. And as I said, we are 85% of the market share, so it's practically, every product is. So there are many that keep happening, but difficult to point out a particular one which is going to have a big number. But yes, we are on almost all the new launches.
Right. So do we, are we getting the feelers from the CV manufacturers regarding the demand?
Yeah,
that we have 85% and the CV cycle has already turned positive. So do we have order book lined up from these CV makers?
Yes, pretty much. As I mentioned right upfront in my address, CV, we see this industry, the growth continuing in double digits, definitely. High double digits. In terms of 20%, 15 to 20% growth. So certainly that will continue for some time. The models are more or less the same. Let's say even if it comes to the BS6 implementation, it is only a change of engine for which we have no role to play, but we are definitely there on the products.
Okay. Thank you, sir. Thanks a lot.
Thank you.
Thank you very much. We have a question from Mr. Arvind Paranji, an individual investor. Please go ahead.
Yeah. Hello, sir. Thanks for the opportunity given. I have two questions here. One, I would like to understand the margin profile for each of the segments between two-wheelers, passenger vehicles, and commercial vehicles. Are these how different are these, and which of it is beneficial for us? Number one. And number two, you had mentioned that you're looking at improving our EBITDA margin levels to lower double digits. So what are the initiatives that we are taking for that?
Okay, so thank you for your question. On the margin profile, I think we have not been, we have not commented on our margins across our segment or our channel sales as yet. So I think I will not be able to answer that question at this point of time. On the EBITDA margins, I think there are continuous set of actions both on our material cost consumption front as well as sales price realization front as well as on our internal fixed expenses front. So there are actions which are happening on all three of them simultaneously. There are projects happening on them for improvement. Over and above that, I think there is an external macro environment which also aids in terms of the overall impact, like the current scenario of commodities upswing as well as the foreign exchange impact, which was earlier highlighted. Those also have a bearing. But suffice to say that there are enough projects which are currently being pursued on our material costs as well as on our expenses, which will...
Hello, Mr. Arvind, your line is very disturbing, sir.
Yeah, I've answered the question.
Yeah, all right. Thank you, sir. Thanks.
Thank you. As there are no further questions, I now hand the conference over to Mr. Koladkar for closing comments.
thank you once again. Thank you all for all those questions and observations, some of which we were not able to answer, but we'll definitely provide you the data in short span of time. So as you can see, of course, we've had a good year, good growth. We've tried to maintain, through continuous efforts on several fronts, the margins as well. Yes, things could have been better, but you should also understand that the environment has been challenging due to the facts that I told you, some additional headwinds that we are seeing in terms of raw material cycle, duty, forex. So those have put some challenges. But yes, we certainly are working on strategies to counter those and work towards improving the performances further for Gabriel India. So we thank you once again for attending this call. And of course, taking this opportunity to wish you, your family, and your near and dear ones a very, very happy Diwali, and hoping that this Diwali is really good for all of us in the industry and, of course, the country at large. Thank you very much, and bye-bye.